You are watching Morning Brief at 9. I am Krishnakumar. Let's quickly get a check of where the Indian stock markets have opened for Monday morning. Sensex and the Nifty both down over 1% in the red. Sensex opening down 1,000 points. The Nifty Midcap down over 1%. Nifty Smallcap down over 1.5%. India's volatility index shooting through the roof. It's up over 16%, nearly 16.5%. We have Kranthi Bathini, equity strategist at Wealthmills Securities, now joining us live on the broadcast to break it all down. Kranthi, I want to say good to have you with us this morning, but this is a morning that's a worrisome morning, fearsome morning for investors in India and across the world. Let's focus on investors in India. I'm sure all the visuals and the news coming through the weekend, they would have been bracing for this fall. But would you say that, for all the fears, this fall is kind of modest, or would you think that this is just the beginning and there's lots more to go?
Interesting question. But we need to closely watch how things are going to evolve over a period of time, Krishna. How the Middle East crisis are going to erupt in the next coming days, that is crucial. And the joker in the pack at this point of time is crude oil. If the crude is going out of the way, definitely there is a worrisome and markets are expected to be in a pressure point in the coming days. But if we can see the crude softening in the coming weeks, then the impact will be nominal, and definitely this can be a good buying opportunity for the investors who are looking for the long-term returns. If the investors have 2-3 years horizon, definitely things will settle down. We witnessed different wars in the past 5 years. When the Ukraine and Russian war erupted, it's been 5 years. Initial phase of the war, there was a tension, there was a panic in the market, but market could able to recover and market could able to climb through those wall of worries. If this time is different, definitely no, because the Middle East is in a complete chaos at this point of time. The supply chains are going to get disrupted. So these are the issues are definitely going to impact. We have a strong bilateral trade with Middle East. UAE is our strong trade partner. So there is a standoff at this point of time. Dubai airports is closed, and UAE is perceived as one of the safest place in the world. Now the citizens are tensed there. The kind of things are taking place in the past 48 hours, and we have a long list of strong list of NRIs who have been investing in Indian markets from the Middle East is concerned. So definitely there is a worrying factor, but we need to closely watch how things are going to evolve in the next coming days and weeks is extremely crucial. Whether it is a prolonged war, or the things are going to get sorted out in the next coming days. Market is closely observing at this point of time, but we could be able to hold on to the range of 24,874. That was the previous support level where market could be able to take this support when the budget was announced. From there onwards, we witnessed some kind of a bounce back. This is the early reaction to the market and what's happening in the Middle East. But we need to see how the day is going to progress in the coming hours. That is extremely crucial. We'd see some kind of a buying interest or some kind of a bottom fishing that's going to come or not, we need to see. But there is no need of panic. Just wait and just observe the things in the coming hours.
That's the word I'm looking for, Kranthi, because the fears are that there will be panic in the Indian markets. But clearly, Sensex being down over 1% at opening and 1,000 points clearly doesn't show there's too much panic. There's clearly negative sentiment. And at this stage, everybody is thinking of the worst. Will this market fall be on par with the likes that we saw in 2008 or during COVID in 2020? And more importantly, how long will this conflict last and keep battering the markets? Because I'm asking this as a fellow investor. I've seen my portfolio take a hit badly in the last 2 to 3 weeks with fears of the war itself bringing down the Sensex and stuff. So tell us from an investor perspective, what they be looking out for, at least in terms of the support levels you're talking about, and how they should plan their investments, their exposures at this stage?
Krishna, one thing is one need to differentiate, okay, the long-term investing strategy and any kind of a short-term investing strategy. Definitely, you are correct. There is a lot of panic. There is a lot of ambiguity among the investors, and last 48 hours, investors have been in a panic mode. What's going to happen on Monday morning? But relatively to the panic, the fall is restricted at this point of time. We need to see how the day is going to progress. But pre-opening, there was a much more fall in the Nifty itself. Nifty was down around in the pre-opening around 400 points around, but we could able to see some kind of a gradual recovery in the Nifty also. And it is not only India. Okay, it is look at Hang Seng. It lost around 500 points in the opening. So it is a global crisis at this point of time. But it is by and large, it's not a financial crisis, unlike 2008 and all. So and markets have been going through these kind of phases of war. Market have witnessed Israel and Gaza Strip war, and in the meantime, we witnessed some kind of tensions between Israel and Iran. It's not new, something new, but whereas the war zone has spreaded to right now to the entire Middle East, that's where the markets are concerned at this point of time. Earlier, the war zone is just limited to the airspaces of Israel and Iran. That part is very small, and that limited zone. Now the war zone is spreaded to the entire Middle East. That's where the investors are concerned at this point of time. But it is the mood of the market is in a negative territory in the medium to short term. But look at the long-term growth story of India. We have a strong domestic macros at this point of time. Last week, the GDP data is quite strong. The GST collection has been robust at this point of time. So the domestic macros are quite good.
Fair enough.
Yeah.
Fair enough, Kranthi. The reason why I'm interrupting right now is that, like, as we speak, Sensex is down 700 points. There is already a recovery. You're seeing in Nifty and Sensex were down 1.3%, 1.5%. Now they're down 1%. Already there seems to be some recovery in the markets. And, analysts say the way Asian markets reacted, which opened earlier than the Indian markets, they were also seeing only modest losses. You see Hang Seng, Nikkei, Kospi, TAIEX, all of them down just about 1.5%, not the kind of rout that one would have expected. So that sort of portends, tells us that the markets will not be reacting in an extreme, global markets, and consequently Indian markets will not be looking at an extreme reactions. A lot of what is happening right now has already been possibly factored in.
Yeah, one thing is markedly closely observing the movement of crude oil. If the crude oil is going out of the way, anything above $80 to $100, that's where the key concern is going to be. That's where the cracks we can witness in the market. Okay, that's the real concerning area. As long as the crude is below in the range of $80 per barrel, nothing to worry at this point of time. Just observe the crude and also the FPI behavior. In the month of Feb, FPI turns to be the net buyers. They bought around a tune of around 22,000 crores. How the behavior of the FPI is extremely crucial going ahead. If the FPI buying turns positive in the month of March, then we can see a fast recovery in the market going ahead. But crude is the crucial thing to observe at this point of time.
The crucial thing to observe here at this point, Kranthi, we just, as you were talking, we're looking at the worst crashes that shook the Sensex. There you have 2008 global financial crisis, Sensex down 61.5%. 2015 China panic, 5.94, nearly 6%, over 6% on demonetization. And then, during COVID, it was over 13%. And after the elections of 2024, it was down over 11.5, nearly 12%. Clearly, we're nowhere close to that as of now. So investors can breathe a sigh of relief at this stage, isn't it? Quickly.
Krishna, just to add one point to you.
Yeah.
Whoever invested in the optimum level of pessimism on Indian markets, they tend to get benefited over a period of time. So if this is the kind of a same fall, definitely if the investors have the courage and the conviction and the outlook for the Indian economy, definitely one can buy and chip in a staggered manner. If they have the 100 rupees to invest, just go and buy for 10 rupees. This is the starting point. Nobody knows the exact bottom, but keeping the cash idle can be the most dangerous thing than this fall.
Okay, keeping cash idle is clearly is very dangerous. But would you say investors should wait a little bit more before they get into bottom fishing?
One thing is nobody knows the exact the bottom for these kind of falls. And also how the things are going to evaluate, how much time this war is going to take place is also completely uncertain. If there is a consultation or getting into discussion mode, and if suddenly if there is a ceasefire is announced, or if things are getting sorted out within a couple of days time, then we can see immediate bump up in the markets. Immediately you can see a spike in the markets. So and if this is a prolonged kind of a war, that also nobody is not sure. So when these kind of uncertainty is there, if the investors are a long-term investors, definitely in a staggered manner they can chip in to buy those stocks.
Okay. Kranthi, with all this uncertainty around the stock markets and equity markets around the world, clearly we have to understand what is happening with precious metals, gold and silver. Gold and silver rates today rose nearly 2.5% amidst those escalating tensions in West Asia, unsettled financial markets, and has prompted investors to seek to safe haven assets. Clearly, that's what happens every single time there's uncertainty in the stock market. Spot gold rate today climbing to $5,400 per ounce. Meanwhile, spot silver prices also surging nearly 2%, touching highs of $96.93 per ounce during the Asian trading hours on Monday. These are early figures that we're talking about as far as gold and silver is concerned. Kranthi, it doesn't require an expert to say this, but as an expert, I want your thoughts on it. Do you think that already there's so much talk around gold and the surge in gold? Some say there's going to be a greater surge in gold, but clearly all this uncertainty will only add to that surge in gold.
Krishna, if you see the tendency of the gold and silver, the precious metals, they are perceived as the low beta asset classes, low beta commodities. But the kind of volatility what we witnessed in the past 3 months and 6 months, silver, look at the silver, how I don't call it as a correction. The way silver got crashed in the fortnight or a month back. So they are no longer. I am little bit hesitant to say they're the safe havens at this point of time, because the kind of volatility they witnessed, and silver and gold they witnessed as volatility as equivalent to equity markets in the recent past. So coming back to your question, normally the tendency is, okay, when there is a geopolitical escalations that do come on surfaces in the market, investors tend to go for the precious metals. That is the first and foremost is the gold and silver, because of the industrial demand the silver have. So tend to go for these kind of a I tend to say safe assets, because the volatility is right now very very much high. The investor tendency normally get into towards the gold and silver. That's what we are witnessing at this point of time. As long as this uncertainty and geopolitical issues persist, and also the central bank buying that keeps on goes up, we can see the prices of gold to be informed. But silver, there is a lot of speculation that getting into the silver. Look at today morning, all the ETFs of silver, they are up around 6 to 7% on an average. So a lot of speculation is taking place in silver at this point of time.
Okay, a lot of speculation is taking place in silver. we're almost through with you. Quickly, last question before you let you go. Is there any way that investors can hedge themselves by investing in sectors that are not oil intensive or export intensive? Because those are the stocks which will be hit the hardest. All those stocks, companies which are dependent on exports through shipments, and companies which are heavily dependent on oil shipments.
Definitely, those are the companies that are going to be impacted in the medium to short term. And also the aviation is going to get impacted
Yeah.
in the medium to short term. And also the paint and also tire, where the crude oil is one of the key substance of raw material for them. Those sectors are getting impacted. But by and large, look at the domestic centric sectors. And coming back to the defense as a sector, Krishna, 7, 8 years back, 10 years back, we don't have any defense sector in India. Last 5, 6 years, we have a defense sector theme that has emerged in India. So defense is going to be one of the key important sector going ahead, and at this point of time. So defense also going to be get benefited in these kind of falls, and any kind of geopolitical escalations that goes up. Defense is the theme that's going to emerge, and the capex and infra theme also very extremely crucial at this point of time for investors who are looking for long-term investing in the sectorial basis at this point of time.
Fair enough. We'll leave it at that. Kranthi Bathini, equity strategist at Wealthmills Securities. Thank you so much for taking time out to
Thank
be
you,
with us
Krishna.
here
Always my
on
pleasure.
Morning Brief at 9.